If you're a small business owner, you probably have insurance, but are you properly covered for what your business actually does? I'm here with Anton Kaminsky from Kaminsky Law. Anton, that sounds like a really big issue if you're not properly insured.
So we see so much of this. And it's something that we started talking about in our last podcast as it applied to general contractors specifically and people performing, contract labor. But it's something that happens in every business. And we've seen it in a wide range of businesses. And what happens is people will have liability insurance. You'll go to either an insurance company or an insurance broker, and they'll give you insurance. And then when you get sued for something, it turns out that insurance doesn't actually cover the thing that you do as your business. And I have a ton of examples.
Well, where does that fall short? Because, I think I have small business insurance. I went to my broker, I told him what I do, and I assume I'm covered, right? I'm not an insurance expert. So where does the onus fall, or where does the breakdown happen that you see at those points? Because I think for people watching, it would be really valuable for them to go if they're about to engage in insurance, or they've had insurance for a while and they maybe are thinking, hey, I should probably call my broker. Where's the breakdown happen?
Sure. So a lot of people will get insurance without a broker. And so then the onus is on you to read your policy and understand what it covers and doesn't cover, because if it turns out that it doesn't cover something you need it to cover, well, the insurance company's not going to know. So it's your job to know. And most people don't know how to read a 100-page insurance document.
And so that's what? They went online and, I know I went through a broker, right? So I'm speaking out of turn here, but so you're saying there's folks that, right, you might have gone to one of the big insurance people, went on their website, typed in your information.
General liability. And just,
got it.
Yeah, so it's possible, right?
Okay.
Most people do go through a broker the way that you're talking about. Then the onus does go on to the broker, right? And the interesting thing is that you have to think about the motivations. The broker's motivation is to give you the best quote, right?
Right.
And so sometimes the way to give you the best quote is to have exclusions for all sorts of things that potentially might not impact you, right? There's terrorism exclusions, there's flood exclusions, there's volcano exclusions, nuclear war exclusions. There's all sorts of exclusions. But then there's exclusions that really start being very business specific. Mm-hmm. And one of the ways that you could make your insurance cheaper is to put on some business specific exclusions. And what winds up happening is if you go to a broker that's just competing on price, they might put an exclusion like that on your policy, never really explain it to you. And now you have a policy that you're paying for, but if something happens, you're not covered.
So I don't know which way to go in terms of the question here. Is the better question, I guess, one, you pick the path, right? So one question is, okay, what question should I be asking my broker, right? To make sure that those exclusions aren't going to affect me. And number two would be, if, is that onus on them a little bit to have let me know, right? So I guess let's answer the second question first, right? And then
Yeah. So here it is with the broker question, right? If you go to a broker, best practice. Let's do best practice for if you go to a broker. Explain to the broker what your business is. Make sure you put in writing what you do to the broker. And then when they give you a policy back, ask and say, hey, this is what we do. I'm just making sure that this policy covers this type of thing. And if they say, yes, it does, I'll explain later. I could explain now if you want. That onus really does fall on them because you've explained to them in writing what you need. They've responded in writing that this policy has it. So then if 2 years down the line, it turns out that you don't have this coverage that you need, now you could at least sue the broker and go to their insurance policy and then say, well, the broker was supposed to provide me insurance. I explained to him what I needed. He didn't do it. His fault.
Right.
But
I imagine there are some of those exclusions, though, that are kind of, there's probably a reason why it needs to be adjudicated, right? Because there's probably some exclusions that the broker could say, how could I anticipate that he would need this exclusion? You could say, I imagine it becomes a really hairy situation.
It does and it doesn't, because there's so many businesses. I'm happy to give you a bunch of examples, but there's so many businesses where it's so obvious what I do and it's so obvious what this business does that to have an exclusion for that is absurd.
Okay.
And I'll give you an example. So we're suing a funeral home right now, and the funeral home has general liability insurance, and the general liability insurance has an exclusion for any damages that arise from mortuary services.
Okay.
And so his entire business, for which he has general liability insurance, is an exclusion. And it's almost like why do you even have a policy?
Sure. Okay. So, but the onus at that point, if he went through a broker, is the broker. Like, there's no situation where, I mean, could there be a situation where, he's like, wow, that one that includes the mortuary coverage is really expensive. Can you give me one without it? Like,
sure.
Okay.
Right. And then if he does that, then the onus is back on him
Because
he read it, understood, or whatever.
Which is why you said earlier, have everything in writing.
Right. But more often than not, that didn't happen. Right. So he asked for, he went to 4 brokers, right, and explained to them maybe what he does. Hey, I own this funeral company, funeral director company, funeral services company.
And they were like, do you really want funeral coverage though?
Or they didn't, or they just didn't say anything at all.
Right.
And they said, of the 4 brokers, 3 of them gave him a policy that's $5,000 a month, and one of them gave him a policy, $5,000 a year, and one of them gave him a policy that's $2,000 a year. He's like, no brainer, $2,000 a year, but he doesn't understand
what he's missing.
Right.
That's fascinating. I guess really quick sort of footnote there. If you're suing him, right? You said,
yeah,
and he now maybe is in a situation where his insurance provider misled him, right? He has to sue them. From a timeline perspective, right? For your client, how bad does that? You know what I mean? Because even if you are in the right and he's in the right, the funeral home, and they're gonna. This could take, I imagine, years. And
that's a great question, because what it does is it dissuades us as lawyers from even taking on that case.
Wow.
Because we're looking, especially, we talked about funeral cases for a while.
Sure.
And I don't want to get too far into the weeds on it, but the idea that if I look at a docket of a funeral home that's been sued 20 times, right? Mm-hmm. And I see, judgment, and this guy's not paying those judgment, it tells me that he doesn't have this proper insurance, so that the next client that calls me and says, I want to sue that funeral home, we're not going to do it.
Because there's no money
I'll get a judgment, and then nobody's collecting, so we're all just wasting our time, right?
Interesting.
And then at the end of the day, it really should be probably on that funeral home owner to go back to his broker and say, hey, look, I have all these insurance claims that should have been accepted or covered if I had the proper insurance, but I don't. And so, I'm suing you, broker, for all these judgments.
And then that could take however many years that takes. All these judgments are sitting in a backlog, and you're just waiting.
Right.
And potentially forever.
You probably will never get paid.
Okay.
Right. And so there's a ton of examples like this, right? It's not just, we talked about general contractors, but for instance, general contractors is a place where it is super ripe for exclusions. So when you're a contractor of some sort, you really have to explain to your broker what type of work you do and what type of work you do not do. Because there's all sorts of exclusions. They have multifamily exclusions. So you're building houses or you're working on houses, but if it's a multifamily property, we're not going to cover it, right?
I could see that being a huge issue, yeah.
Yeah, there's new construction exclusions, right? So you're a GC, you're a, remodeling guy. You're a home repair guy that comes in and fixes plumbing or electrical or whatever it may be.
Existing homes.
Yeah,
right.
Existing homes, you're doing, remediation work or some sort of, improvement work.
Sure.
There's an exclusion that says we're not covering any work you do on a new construction. And so if you have this policy, you hold yourself out as a contractor that fixes houses, and then all of a sudden somebody gives you a contract to go build a new house or do your same tasks that you do on existing houses to a new house.
Oh my God.
That might not be covered under your policy, and you'll probably have no idea.
Wow. Yeah, that's a really great question. I mean, it also goes back to, it's impossible to hire somebody at that point. Like, based on everything you're saying, right? If you're the customer at the end of this, it's like, I got to vet your contract, your insurance, the subcontractors you're hiring insurance, their insurance. I mean, it just keeps going.
It's a nightmare. It's a nightmare. And what you usually do, I mean, not to get back into the general contractor conversation, because I want to keep this,
because we did hit that in a separate episode, and that's something you definitely should listen to if you're about to hire a contractor or are a contractor. There's a lot of information in there about
we
best
went
practices.
really specific there.
Detailed there. But today, going more general on insurance. Yeah, go ahead.
Right. And then, I mean, there's all sorts of things. So, for instance, and we talked about funeral home. We talked about, general contractors. We had a case a long time ago where the person was a wine dealer and his insurance didn't cover refrigeration issues. And it's like, okay, well, half of my wine stock is refrigerated. And so if my refrigerator breaks, I have no insurance. What's the deal?
Wow.
Right?
Okay.
And so it's like, it'll be these very nuanced things that apply to your business that somebody that does insurance services really needs to get into the weeds of what you do, what you don't do, what your exposure is that you need coverage for, and to make sure it's covered. I mean, we have a client that does, internet sales. A lot of people out there are doing internet sales, right? And does your insurance cover advertising injury, right? So if you go and do something online, whether it's, violate ADA, Americans with Disabilities Act compliance, or your website does something that it shouldn't do, or you infringe on somebody's trademark or anything along those lines, you might get sued, right? Mm-hmm. And then your insurance policy has an exclusion for advertising injury, right? And you're like, well, wait a second, all I do is advertise.
Right.
Right?
How could you have, pretty much every business advertises in some way. How could you even reasonably have, like, what's an example of a business? And maybe this is an unfair question. It's not something we talked about before we recorded, but like, what's a business that wouldn't need advertising coverage, like, or an errors and omissions like that?
Well, there's a lot of businesses that don't really go out there and, really actively advertise, let's just say, right? Like, people go and use Google AdWords and they spend money to bid on keywords and clicks, and you're much more exposed that way to doing something that maybe you shouldn't have done.
Interesting.
Right? Infringing on some other business. Maybe you compare yourself to another business in an unfair way and you didn't even know that wasn't okay, but you did it and now you're getting sued.
I know, right.
Right? Whereas, mom and pop plumber company that's got their, logo on their truck and has their, Google Maps page and has their web page. I mean, they're not really advertising in that sense.
And so in that case, not that you're an attorney, not a broker, ask your insurance broker about these questions, but in that situation, even as not that you'd be advising somebody, but even in that situation, you're like, I can understand why somebody would exclude that from their policy,
or not need it, right? That you might think, like, how much coverage do I need here?
Right.
What am I going to do that's going to cause?
Well, I guess that's the other part of it, is not just if you have any coverage, but
what's your coverage?
Do you have enough?
Right.
Because that's the other thing. If you caused enough damage with that advertising example, maybe you did have coverage, but you didn't have enough. And so also defining that, right?
Right. And there's an important note there. And there's two things I want to cover. So don't let me forget the second one, which is the insurance defense piece.
Okay.
But the first part is the how much, right? And the how much is a great question, because people will get, coverages. For instance, right? If you get coverage for, and I forget the exact term, but basically somebody hacks your website, right? It's like a hacking coverage, and get all of your, customer information, whatever you store. A lot of people don't really store their data on their own servers, right? So if you have a Shopify store, for instance, you probably don't store your own data.
Right, it's all with Shopify PayPal, whatever your service.
Right, so they need to get hacked in order for that to be an issue. Maybe, I don't know, right? But a lot of businesses that are small businesses have some, maybe they store your credit card, maybe they store your, your address, your phone number. I don't know if there's reason for people to take your social, but maybe they take your social and they store that locally somewhere, and somebody potentially hacks your business, and you're like, yeah, I have coverage for that, but it's $10,000.
Right.
So like, all right, well, how far does that get us?
Right.
And so that's a great question, is to not only look at whether or not you have coverage, but really, what is the coverage? What's the amount of coverage? And does it cover the thing that I need? And again, I have examples on top of examples. I mean, people have employment liability. Like, if you have 3 employees, you don't need, or I don't want to say you don't need, but you probably don't need, or you maybe don't need, employee errors and omissions coverage.
Right.
Because if your employee screws up, it's really like you screwing up, because you got 3 employees. Right. But if you have 50 employees and you don't have employee coverage, and you don't really have control over those employees, direct control, you're exposed potentially, right? Or if an employee sues you for something that, discrimination or whatever they might sue you for, and you don't have you don't have the proper coverages in place, you're exposed.
And it's all, that comes back to the idea of as your business grows, right? So when you start, you have 1 or 2 employees. You don't need these pieces, maybe. But then as you start to grow, you're thinking about growth. You're thinking about sales. You're thinking about hiring the next person. It's a good opportunity to come back and go, okay, wait a minute. What do I actually have coverage for? And what do I need to get coverage for? Because you can run into these situations. I wanted to, because I promised you I wouldn't lose this, the insurance defense piece. Talk about that a little bit.
Okay. And this is where we come in as lawyers, really. Right? Because up until now, we're really talking about, how do you protect yourself on your own? And look, find a good broker, speak to that broker, make sure that broker understands your business, and then double check, right? Double check in writing. Hey, this covers what I do, right? Right?
Do you suggest in that situation, the medical advice, right? Of getting a second opinion. Is there an opportunity for that? Or, I'm sure insurance brokers are like, no, you don't need a second opinion. I'll get it right the first time.
So yes and no. I don't know exactly how the brokerage business works. And so there are situations where if one broker quotes you on a policy, another broker might be prevented from quoting you on a policy for some period of time, unless they go through completely different channels.
Yep.
And so you might want to get a second opinion, but I think it's almost just as good to go back to that broker in writing and say, hey, just to be clear, this is what we do.
Sure.
This is what we need coverage for. I'm not an expert at reading this 100-page policy. Can you please confirm that we have this?
Right. And make sure that it's covered. But in that situation, I just want to hammer this down because I imagine there's a lot of nuance there, because brokers are going to be able to say, like, I only know about your business what you told me about your business, right? And I can predict certain things, but I'm not going to be able to predict everything, right? That's your responsibility as a business owner to ask those questions. And so there's got to be, unfortunately, that gray area where, we excluded this because how could I predict that your ice cream truck business was going to need a advertising errors and admissions policy for your 49th employee that disparaged Ritas,
Right.
Like it's gotta at some point become.
Yes. And I agree. It would become too onerous. And I don't think that we're talking to those extreme cases here.
Right.
I think what we're talking to is make sure that your insurance coverage covers your core business.
Yes.
Right. So you shouldn't be a funeral home with mortuary exclusion. You shouldn't be. Right. Or you shouldn't be a cemetery company that doesn't cover emotional distress damages because because that's all you're going to do is if somebody has an issue with a burial, it's emotional distress.
That's the pain you've caused.
That's the pain. You're not causing them physical harm, right? And so it might cause physical harm if the emotional distress leads to nightmares and sleeplessness or whatever it may be, but generally speaking, your slip and fall coverage is not going to apply to the issues that you might have if you can't bury somebody in their intended location.
Sure.
Right?
Yep.
And so make sure you have that coverage.
I think that makes a lot of sense. And I think everybody listening to this and watching this right now, if you own a business, probably best practice is to go shoot your broker an email if you already have insurance. If you're planning on getting insurance, make sure to follow these best practices.
Every year, everyone's policy renews. Okay? That's natural.
Yep.
And every year, and I'm sure you guys have all seen it, your policy goes up, right? Has anybody ever seen a policy go down?
Let's take a quick moment of silence on that. And continue. Okay, so yes,
nobody's policy has ever went down,
sure,
right? And so every year you really have an opportunity to go back to the person that's going to get paid when your policy goes up to say, can we just confirm that we're covering this? Or can we just confirm what we have here or what our policy is? Because usually all you do is you get an invoice, an explanation that your policy went up by 20%, 10%, 30%, whatever it did.
That letter, that envelope with the giant fat document in there that updates every time something changes. Yep.
Right. And then there's no explanation behind it other than pay more. And so everybody should really take that opportunity at least every year to just touch base with your broker, maybe read the policy yourself. Look, everybody wants to be their own lawyer. Nobody wants to read this insurance policy.
Sure.
Right? Maybe read the policy yourself and say, hey, wait a second, this exclusion seems like it excludes my business. Maybe we should Talk
should talk
this.
about that, right? And I think the other thing is the incentive is always to try to get that number down, which creates, as you talked about, this issue where I'm trying to get to that. It's like playing, blackjack, right? You're trying to get to that perfect premium number of exactly the coverage I need, not a dollar more, because I don't want to have to pay more. But that does create a sort of perverse incentive for everybody, right? The broker, the business owner, to try to like push that number down, which can open the door for these exclusions. So it's really asking those questions first.
And to just make you guys a little bit more afraid is that if you don't have the right insurance coverage, and we covered this, 5 videos ago, but if you don't have the right insurance coverage as a business owner and your business is not well capitalized, i.e. you're not making millions of dollars and you don't have millions of dollars in the bank, one of the factors that a court can look at on whether or not they want to pierce the corporate veil and go after you personally is whether or not you had adequate insurance. And so if it turns out that you're a funeral home, for instance, and you own a funeral home company that, doesn't pay its bills on time or doesn't have much assets and is really operating from, burial to burial.
Right.
And you don't have the right insurance coverage as your business.
There you go.
And then you get 3 or 4 judgments against your business. Somebody could wake up and say, hey, I think you should be personally liable because you knew better.
Making the same mistake.
And you were in the best position to mitigate that risk or to avoid that risk, and you did nothing about it. And so you should be held personally liable. And that's another reason why you really should make sure that your business is properly insured, because that tiny, relatively speaking, that tiny piece of money that you're going to pay every year is worth more than the headache and the nightmare of not getting covered and not getting an insurance defense. And that's a good segue.
That's a great segue into, okay, now, we're going to focus on the folks that are listening to this who are now going to learn about what happens when these things go wrong, right? And when you need to bring in an attorney, right? Because again, you're not a broker, you're an attorney. This is insurance for business owners to learn about best practices, how to get the right coverage. And now what happens when you need to lean on an attorney for support.
Almost every single policy has a duty to defend. And what that means is even if somebody brings a bogus claim against you that doesn't really have any merit, they're lying through their teeth, whatever it is, your insurance policy, as long as the claim is something that is covered under the policy, the insurance company has a duty to defend you. So they're going to hire an attorney or hire a law firm that's going to come in and defend this claim, bogus or not, true or not, right?
Okay.
And I think that, so this ties into the first thing we were talking about, mainly because you want to make sure that whatever the claim is subsumed by your insurance. That's first and foremost, right? So that you can then lean on the insurance company on the duty to defend.
Okay.
And so if your policy, it should have a duty to defend, but it's important that in order for that duty to defend to kick in, the thing has to be covered under the policy.
Okay.
You see what I'm saying?
And you said should. I mean, is that yet another exclusion I should be worried about when I'm talking to, or is that's pretty much?
It's pretty much standard that there's a duty to defend.
All right. We never want to say anything is 100%, but you should have a duty to defend in there. However, you're not going to be exercising any duty to defend if you're not on a covered claim.
Right. And so what happens is you'll get a letter from an insurance company. So let's talk through the process real quick.
Okay.
Right. Somebody files either a lawsuit against you or threatens to file a lawsuit against you. And we're talking about businesses. We're not talking about car accidents. We're not talking about slip and falls.
Right.
We're not talking about personal injury type things. We're talking about, business claims, business issues.
Sure.
And so somebody threatens to file a lawsuit against you. You then would potentially reach out to your insurance company and make a claim and say, these people are threatening to file a lawsuit or these people have filed a lawsuit. And the insurance company then analyzes whether or not that claim falls under your policy.
Right.
And then if it does fall under your policy, they're supposed to assign coverage. So they're going to assign a defense. They're going to assign an attorney that'll step in and basically defend you.
Okay.
Okay. A lot of times what they'll do at that moment, even though they're going to defend, they're going to send you what's called a reservation of rights letter.
Okay.
And that reservation of rights letter says something along the lines of, if it turns out that you did this, we're covering it. But if it turns out that you did that, we're not covering it. Right?
Okay. Do I get to choose the attorney or no? What the insurance company is going to provide that? And once I assume, and this is what probably you're going to talk about, when you do that reservation of rights, you want to make sure what you're agreeing to. But I don't mean to give away the plot here.
Okay. So I'll answer both of those questions real quick and then jump back in. So number one, the reservation of rights letter, you don't agree to. That's just the insurance company's
just letting you know.
Letting you know. We're letting you know what the deal is.
Okay.
Right. And you could dispute that, and we'll talk about that a little bit later, but you can dispute that.
Okay.
Okay. But the other piece that you asked is a great question is, do you get to pick your own attorney? What does your policy say? Right. So some people's policy, they might pay extra to say, hey, we have these lawyers that we use for all of our business, and this is how much they charge. And if we get sued, we want these lawyers to represent us. And so that could get written into your policy. More often than not, you do not get to pick your own lawyer.
Right.
So that would be an excess amount that you pay.
Okay.
You also always have the option, and we'll get to this too, is even though they assign an attorney, you have an option to hire your own attorney at your own cost to oversee that attorney. But we'll get to that.
Okay.
Don't let me forget that either.
That's going to be important.
All right. So back to the reservation of rights letter. So they send you a reservation of rights letter, and it'll say, if this happened, we're covering it. If this happened, we're not covering it. And let me give you specifics. So insurance typically doesn't cover knowing purposeful conduct. So if you did something on purpose, they're not going to cover it. They don't cover fraud, for instance, right? If you defrauded somebody, your insurance is not going to cover fraud.
Sure.
It will typically cover negligence, right?
Okay.
So, oops, I did this by accident, covered. Oh my God, I did it on purpose, not covered.
Got
right?
it.
And so and when lawyers sue, they sue via shotgun approach. So they'll sue you for negligence and fraud, for instance.
See
right?
what sticks.
See what sticks, right? And so your insurance, the reservation of rights letter will say, if it turns out that you're negligent, we're going to defend you. But if it turns out that you were negligent, we're going to cover this. But if it turns out that you did this purposefully, knowingly, and willingly, and you defrauded somebody, we're not going to cover it.
Got it. And when does that get revealed? I mean,
at the end.
At the end. Okay. So if you're sitting there going like,
I don't know.
I'm doing my Mr. Burns impression. Like,
right.
Yes, Smithers, we did do this, but right. You may find out, you think you're covered, you think insurance is stepping in, and all of a sudden at the end, they're not going to cover you, which means I imagine all the coverage is gone. That attorney that they got for you, you're probably having to pay for.
They will have paid for that attorney.
Okay.
Again, it might be different depending on which policy says what.
Okay.
It's not always clear, but there's so much there to unpack. So I want to come back to that question. Okay. But I just want to cover the reservation of rights piece real quick. So you get this reservation of rights letter that says if you engage in negligence, we're going to cover it. If it turns out you engage in fraud, we're not going to cover it. Right. But we're going to defend you in the meantime. Fine. For most people, for most businesses, for most issues where it's, negligence or it's a slip and fall, it's usually going to be covered.
Sure.
Right. Sometimes that reservation of rights letter won't be a reservation of rights letter. It'll be a denial letter. And it's going to say, for a reason A, B, C, D, this is not covered under your policy, and we're not providing you a defense, and we're not covering this at all. Right. Sometimes it'll even say things that are a little bit strange. It'll say, we're going to provide you a defense here because we are supposed to cover all bogus claims, again, depending on what the policy says. But we're going to provide you a defense here. But if you're liable at the end of the day, we're not going to cover it. Right? So we're only providing a defense. We're not providing coverage. That's something else that happens, right?
Okay.
Or you get and I might have said this already, but you get the denial letter, just we're not covering anything for reason ABC.
That seems to make more sense to me than like a little bit pregnant, where we're like, we're going to give you a lawyer, but we're not going to cover you.
Well, we have a duty to defend, but if it turns out that you did this, you're not covered.
Got it. Okay.
Right? And so that's really the time that you want to get a lawyer involved. So as soon as you get that reservation of rights letter, if you hadn't already involved a lawyer because you got sued or whatnot, right? That's really when you want to make sure to get a lawyer involved. If you get a coverage denial letter, you want to get a lawyer involved. If you get, we'll defend, but we're not going to pay if it turns out that you did this letter, you want to get a lawyer involved, because at that point is really the best time that you have to review the policy with somebody that does this, right? And to say, wait a second, guys, you are pointing to, clause A3(4) subsection 5, but if you look at clause B7D subsection 8,
I see what you're doing here.
It says, it says that you do have to cover this.
Sure.
And the interesting thing is, in Pennsylvania at least, the law is if it's confusing or if there's conflicting language, tie goes to the runner, right? And you are the runner as the business owner that doesn't know anything about insurance, not the insurance company who should know better.
Sold you, and sold you the policy. So, okay, so you're at this crossroads. If I get if I get this letter and it's just, hey, we're going to cover you and we're going to give you a lawyer, and this looks like a normal case, slip and fall, whatever, and we think you're covered. Still call a lawyer to double check the reservation of rights, or
that's up to you.
Okay,
but
but it's not a red flag. If there's anything in there that's not clear cut, you're good, we got you. Get a lawyer involved right now, because there may be an opportunity to get that full coverage.
Look, I'm going to self-promote here hard, okay?
Right. Let's everybody clear the room. All
Clearing
right.
the room. I'm going to self-promote here hard, okay? If you are a business and you're getting involved in litigation and you're getting sued for stuff, right? You probably should already have a lawyer involved, okay? If you don't, I don't want to say, this reservation of rights letter is not a red flag, right? If you're a business that does any sort of meaningful revenue, meaningful profit, you should have a lawyer involved, at least to make sure your contracts are good, to make sure your employment agreements are good,
Sure.
to make sure you're not doing anything crazy that might come back to bite you, and to make sure that your insurance policies cover the things that you need them to cover. I mean, that's best practice. Go on.
No, that makes total sense. And I think that we've had at the beginning of this podcast, the whole conversation, which who knows how long it took, 20, 30 minutes to just explain all of the different issues that you might face in that engagement with a broker not properly covering you, right? There's all these, and that's just about insurance. There's all these other tangential issues that your business faces. And especially now, if you're facing lawsuits and things like that, of course, it makes absolute sense. Why take that risk to take it on yourself and just hope that these things are going to work out and that everybody has your best interest? Get an attorney involved.
Right.
It just makes sense.
And you should be thinking about how bigger businesses operate. I mean, they have in-house counsel, right?
Right.
So when they get an insurance policy from a broker, they have their in-house counsel review the policy to make sure it covers what they needed to cover.
And even in-house counsel, I mean, we work with a lot of organizations that have in-house counsel, and they still lean on outside attorneys that are specialized in certain areas when those areas come up. So you've got your in-house lawyers talking to other lawyers. So the idea that you as a business owner that maybe does something completely tangential to the law, right, that has nothing, dry cleaning business, a plumber, electrician, that you're going to, know how to handle all of these specific situations. It just doesn't make sense.
Yeah. Right? And so maybe when you're getting insurance for the first time, or when your business has grown to a spot that is, critical mass, and you're getting insurance and you want to make sure that, hey, there's a couple of things where we have exposure here where we could have liability. Maybe it is a good time then when you're dealing with a broker to make sure that the policy that the broker gave you, a lawyer looks at and says, yeah, this is a good policy.
This makes sense. Okay.
All right, let's go back to the reservation of rights letter. All right, so now you got this reservation of rights letter. You call a lawyer, right? What can a lawyer do for you in this situation? There's a lot of things. Number one, if you got a denial letter, they could point to different parts of the policy under which maybe there should be coverage. And so a lot of people will just get a denial letter, assume that there's no coverage, and then just go hire a lawyer to defend it. And we've had a lot of situations where I get a call from somebody that says, I don't have coverage and I need you to defend this lawsuit. And I'm like, I don't want to take your money. Let me instead reach out to the insurance company and get them to cover this for you.
Yep.
And that's a real thing. We've done that a lot.
Okay. So at that point, it's like, hey, engage the attorney, but target them first to make sure you have your foundation set, which is ideally your insurance policy covering this work.
Yeah, and we've done those in two-phase agreements a lot of times. So we'll say, hey, look, we'll take this fixed fee. We'll try to get an insurance attorney to cover this. If we can't, then we'll,
Then you have to go and actually defend it. Question on that, if you are... you're in a situation where you're engaging with the insurance company and trying to get them to cover, right? And going back to our original conversation, you sense that there's an issue with the way the broker sold the deal, right? What happens there in this sort of timeline and defense approach? Because, yeah, it's all well and good, in terms of, okay, I'm going to go and tell the insurance company that they made a huge mistake here and they didn't properly cover you, and here's the email with the broker, whatever. But I'm taking time into account right now as a factor. So the time it takes for that process to unfold while you're actually still engaging with defending against, right, whatever the claim is. What does that look like? Set expectations for folks on what they can expect.
So I don't know if I could answer the time question necessarily, because all the stuff in the legal world just takes an exorbitant amount of time.
Sure.
Whatever we're all used to as humans for like normal things happening, that's not how
it works. Okay.
Yeah. So, but what we will do oftentimes, especially if you have these communications with your broker and where you're getting this policy from a broker and this broker has explained to you what this coverage is, we'll often reach out to the broker also
Okay.
and say to the broker, like, hey, we got a denial letter. This should be covered. I don't, this is your relationship. Why, do you want to try to figure it out too?
Okay.
Right. Or, you get this reservation. Well, we could talk about the reservation of rights, but I'm just talking about denial right now. So
Right.
the first thing is, a lawyer can come in and try to shake a bunch of trees and see if anybody will wake up.
Sure.
Right. And one of the trees we shake is the broker's tree. The other tree we shake is the insurance company's tree.
Makes sense. And so and hopefully they'll then butt heads together and figure it out on
Well,
your
the
behalf.
broker should be on your side.
Right.
Right. Because the broker really should be like, hey, yeah, we got you this coverage. So.
And you're their client, and
they're
right.
probably playing cover their ass too. At the
Okay,
time. You know
makes
what I mean?
sense. Yeah,
Right.
no, it makes total sense. Okay, so we've got the denial. We made the smart move. We hired an attorney instead of just accepting the denial. And now the denial, now the attorney, you're shaking trees, talking to the insurance company, talking to the broker. Okay, what's
Right.
next?
So I'm trying to get you coverage.
Yep.
If I get you coverage, more often than not, I'll take a step back. Right. I don't want to double bill you for
That's awesome.
something that the insurance
Right.
company is going to cover, and then you don't have to pay out of pocket.
And that might be an important thing to think about if you're engaging with an attorney, right? Because the attorney is just immediately going, yep, it's going to be, assume this many hours or whatever. And they're either not considering going to the insurance company, they're just taking money from the client, which is not ideal. Or they're baking that all in. You're getting double covered essentially, because now if they succeed in shaking these trees, insurance covers you. You're still on the hook to this attorney. So it's good to hear that at your firm, you try to do that in a more fair way.
And if that's a good point. If lawyers don't try to do that, you got to be careful. Right?
Okay.
That might be a red flag. The other thing is, so now let's say we do get you the defense, right? Let's go back to the reservation of rights letter, right? You get a defense, but then they're saying, well, if it turns out to be this thing, or this thing, we're actually not going to cover it. We're only going to cover it if it's going to be negligence, right?
Okay.
And that's standard. That's not crazy. But it creates a very interesting conflict, okay? And what is the conflict there? The conflict is the insurance company's lawyers, I don't want to say that lawyers are conflicted, but it's in the insurance company's best interest that you're either not liable at all, you were not negligent, right? Or you were
something else
so liable that it's not covered.
Right.
Right? The in between is when they have to pay. So if you think about criminal context, even though this has nothing to do with criminal law, right? But in the criminal context, we all know not guilty and guilty.
Right.
Right. And so, negligent is neither guilty or not guilty in this sense. It's in between.
Right.
Right. So not guilty is you didn't do anything wrong. So they love the not guilty verdict for the insurance defense. And they love the guilty verdict for the insurance defense, because then they're like, oh, we paid for insurance defense, but we don't have to actually cover the damages. Right. So it's the sweet spot in the middle, the strike zone, that you as the business owner want to be in. You want to be in the negligence zone.
But, and this is not to make any assumptions about anybody, you've got the insurance company who have the insurance company's lawyers defending you. They know what the strike zone is, and they know what these two sweet spots are for them. I know we're not making any accusations, but there is an inherent incentive there.
It's an incentive. So the lawyers that represent you are technically not supposed to be the insurance companies.
Okay, so they're just hired and got it.
They're hired, and they report back to the insurance company on what they're spending, right?
So there's a separation of church and state there.
There should be a separation of church and state, and you would expect there to be a separation of church and state. But, and I don't, again, not throwing anybody under the bus, but there's a lot of law firms that work with the same insurance company over and over again. They get the same business from the same insurance company, and they have a long-term business deal, so to speak, with this insurance company, right?
Right.
And so they're incentivized. I'm not saying it's a conflict. I'm not saying anybody's doing anything untoward, right?
Right.
But they're incentivized to
But I think we get it
for the insurance company.
Right. And I think if we, without, making any accusations in any one way or another, what you can think about now is what I think you were alluding to before, is having your own attorney that's reviewing everything, right? And getting that second opinion and making sure that the defense that we're using, the arguments we're using, the data that we're using are all pointing in a direction that's going to ideally hit you in that strike zone that you described, and not put you in a position where you're not going to get coverage.
Exactly. And I think that you hit the nail on the head. I think that when you're a bigger business, and this is a lawsuit that is potentially gives you a lot of exposure, right? In the hundreds of thousands of dollars, maybe in the millions of dollars. and you do get this type of coverage, and you get this, I mean, you get a defense, you get the reservation of rights letter, you really do want to have somebody else that's solely in your best interests, solely doing what is best for you, the business owner, overseeing this whole thing.
Yep.
Now, you don't necessarily need them writing every brief. You don't need them reading every brief, right? It should just be a strategy,
Yep.
strategy. What are you guys doing? Where are you with this? What are we doing? Are you covering it? And the real big thing, and this is the secret sauce, giving away the secret sauce today.
Write this down.
Write this
Or
down.
get a cup. Sauces usually fit in a cup. Get something to hold the sauce in.
A lot of times, the insurance company is going to be willing to settle before trial because there's costs of defense. There's the risk that it is negligence and then they have to pay the whole thing.
Yeah.
Right. And so they would be willing to settle your whole case, which includes the fraud stuff that they wouldn't necessarily cover. Right. Before trial for a number that is within your policy limits that the plaintiff, the person suing, would take.
Okay.
Right. So if you have $1 million policy and the person that's suing you is willing to accept $100,000, right? And, it's questionable about whether this $100,000 would be allocated to negligence or fraud. You really want to have somebody on your side that's pushing on the insurance company going, hey, settle this.
Got it.
Right? Pay
Okay.
this person so that this whole thing could go away because this is what I'm paying you for.
Fascinating. Because I thought it's interesting when you took that turn, because where I thought you were going to say is, well, you want to make sure that when you were setting this whole thing up, I thought what you were going to say is, the insurance company is going to be willing to settle for this number or whatever that makes sense for them, but it may not make sense for you, right? But what I'm hearing you say is as well that there may be the insurance company may be on the fence of whether to settle or whether to pursue. And again, if you're in that area, you actually are saying that as your own attorney, you could step in, right? Hiring your own attorney that's just vested in your best interest, understands the full parameters of the case. You could step in and go, hey, we really feel like settling makes a lot of sense. And the others, how does the other, I'm sure you deal with this a lot. How well do people play in the sandbox together? Or is it, I imagine if I'm an attorney that got hired by the insurance company and this other attorney's coming in and they're overseeing what I'm doing, there could be a little bit of friction there.
Again, if you think about, the size of businesses, right? You have to assume that bigger businesses are all doing this.
Okay.
So I'm talking to the small business owners here, right?
Right.
If you have a small business and you find yourself in this situation for the first time, you know how people say, what would Jesus do, right? What would a huge business do? And what would a huge business do is they'd have an attorney that oversees this insurance defense attorney. They almost always do.
Right.
Right. There's very few instances where it's like, hey, we're being sued for $2 million. We have insurance coverage, so forget it. We don't even care. Right. It's just, that's not happening.
Sure.
So you do have in-house counsel. You do have outside lawyers looking at this thing and making sure that the insurance companies and their lawyers are doing the right thing. And so you guys should be thinking about that too.
So I want to ask you, because one of the things that, in recording this with you and talking to you for years, you've always talked about ROI, right? And you've talked about that, like, hey, we're working in the law, right? But it's business law, and there is a return on investment from a lot of the things that you're doing, right? Whether it's investing in the right broker who's going to get you the right policy, getting that right premium, if it's investing in an attorney to support you through that process. What are some of the factors that you consider when you're analyzing the ROI of, hey, I'm a small business owner. I've never been in a situation like this before. I'm getting this this ridiculous lawsuit that is totally frivolous. I don't know what to do. The insurance company's stepping in. I'm really going to have to go spend more money. You want me to spend more of my own money now on an attorney just to look over what's going on? If we take the emotion out of this, right, which I know you talk about a lot, let's take the emotion out. Let's focus on what makes sense, what's best business practice, ROI. How do we sort of determine that, and what's the analysis that you go through with business owners?
I think you have to look at your exposure. First and foremost, right? If you're being sued for less than $50,000, right? If you're being sued for less than $50,000, the chances that you need to spend another $50,000 on a lawyer is silly.
Sure.
You can kind of let the insurance company handle their thing and try to get them to settle it, cover it, whatever. If you're being sued for hundreds of thousands of dollars, if you're being sued for something where you have exposure,
Right.
A lot of people know when they have real exposure. They know if the thing that they did, they know if the thing that they did actually caused the damage that it caused. I mean, a lot of times the reason lawyers are involved is because there's a dispute, right? You say the damages are $10,000, or you say the damages are $1 million. I say that they're $50,000, and now we're arguing over a $950,000 spread. That's a real spread,
big, right?
But sometimes, you say the damages are $1 million, but the damages, I know that they're at least $500,000. So now
it's a little right.
Now, I know my exposure is at least $500,000, and so maybe I should get somebody else involved to try to minimize that to the furthest extent possible.
Got it.
And then it becomes a numbers game, really. If you're suing over $100,000 plus, and you spend an additional 10% to 20% of that to try to get yourself coverage, and to try to make sure that it gets settled,
doesn't get out of hand, right?
And it doesn't get out of hand. I think it's a great investment.
Yep.
I think there's another piece of this that we haven't covered at all, but it might make sense to just make this part of it. Is a lot of times you'll have a policy for $1 million standard,
okay,
but you're being sued for $5 million, right? It just happens, right? It's somebody died on your job site, whatever it may be.
Right.
It's not just minor slip and fall claim. It's not a minor business claim. It's a real big claim. And so you have a policy for $1 million. You have a lawsuit for $5 million, or they're demanding $5 million. And your insurance is covering it, but your reservation of rights letter says something along the lines of, we'll pay the first $1 million, but after that, you're on your own. And so now, if I, as a lawyer overseeing that insurance company, can get the plaintiff, this is the person suing, to accept $750,000, so it's within my policy.
Right.
There's still, if I lose at trial, the exposure is $5 million.
But if you can settle before,
But if I could settle before, I could settle within my policy limits. Now, there's a lot of legal mumbo jumbo you can get into there, but a lawyer can help navigate the fact that if this is within my policy, you guys have a duty to settle it, because they're going to accept that amount. You guys are here for that reason. I know you think it's unreasonable, but if it turns out that we go to trial because you refuse to pay the $750,000, and then I get hit with $5 million, I'm going to sue you for those $4 million.
And you're not going to be in a position to even know that you had that option unless you have an attorney engaged at that point. That's fascinating. So to kind of consolidate that, dumb that down a little bit, we're in the situation where my policy covers me to $1 million. I'm getting sued for $5 million. If I bring in my own attorney to oversee and support this case, and we can work out something where we could settle within that $1 million, right, or closer to, and my insurance company is like, no, we don't want to settle. What I guess what would be a reason that an insurance company wouldn't want to settle on that $1 million?
They think it's only worth $200,000.
Got it. And now you're going, look, you're exposing me to the possibility that I go and actually get hit with a $3, $4, $5 million
excess verdict.
Right, an excess verdict. Okay, so that is a great point of just one example of where you're bringing in your own attorney to act in your best interest, and I think that's a really practical example. Do you have any others that are good examples where bringing in your own counsel just makes sense?
Well, another one is if you have a broker and you had a broker and you explained your business to them, and now you're getting sued for something that there's no coverage for, right? In that first lawsuit, you might want to bring them in and say, hey, I went to these brokers. They explained to me that I had the coverage. Now it turns out that my insurance isn't covering it. So why don't your insurance cover it?
Right.
Right. You guys had an insurance policy that prevents you from, engaging in errors. This was an error. So your insurance policy should cover this claim. Right. And tie that all in rather than get a judgment against me that I can't even pay and then have to then try to either assign it or fight it against the broker later. So you really, there's a lot of ways that an attorney that has experience doing this day in and out, and I'm sad that Aubrey's not here because she's done a lot of this.
That's her area,
yeah. And it's helpful. And I think that if we're going to make a short list, because I know how much you like short lists.
I love a list.
Right? If you get an insurance denial letter, that's a good reason to call an attorney. If you get a reservation of rights letter that you don't agree with or don't understand, that's a good reason to call an attorney. If you're getting something that says we're going to cover your defense, but we're not going to cover if you lose, that's a really good reason to call an attorney. If you have a demand for, more than your insurance policy is, and your insurance policy is saying we're going to cover this, but if it turns out that it's more than $1 million, we're not paying anything over, $1,000,001. That's a really great reason to call an attorney.
I wanted to try to do that in sync because I was feeling like a Jeff Foxworthy vibe coming on, but with attorneys. That's phenomenal advice, I think, Anton. I keep focusing on this, and you kind of touched on it a second ago, time. So as a business owner, we all know the relationship between time and money and how these, and especially you add in, that's every day, but right. You add in a case like this and how that might drag and how that affects you emotionally, how that affects you financially, right? You kind of touched on the fact that, hey, if we can press on the broker's insurance for the error that they made and do it now, you're not having to come out of pocket for an error that they made in lack of coverage for a claim that you are getting hit with and then hope that they come in and backfill, right? You're able to get that coverage up front and let the insurance company deal with it. So tell me a little bit about, and I don't know if I'm sure you deal with this. It's maybe sort of outside of your purview of what you do, but like you see, right? What do business owners what is the expectation? What should they expect when they're dealing with something like this? I know you said everything moves slower in the legal space. And how do you leverage that? Like if you're in a situation where you're getting sued, people are asking you to pay money, you're paying attorneys out, and you're trying to just make sure you have enough cash on hand to survive, what's that juggling act look like for a lot of business owners?
So lawsuits typically take 1 to 2 years. I think that's a fair range. I've seen lawsuits get resolved in months. I've seen lawsuits drag on for 5 years, but I think the typical range is 1 to 2 years. I think, if you're filing a lawsuit in Philadelphia and you expect it to get resolved within a year, sure. It's wishful thinking. I actually, believe it or not, just a little side tangent story. We have a case that's ready for trial like today. And we just got on the judge's calendar for June of 2026, like last month.
Wow.
So
okay.
It's ready for trial today, but it's literally the judge can't
We're almost
see
a year
us
out. Yeah.
For a year. So you're just
Wow.
sitting on your hands for a year. So it's really hard to gauge the time piece.
Of course.
But I think you touched on a very important thing on time, and I wish we had a bunch of client testimonials that we could pop up on the screen here. But one of the things that our small business owners tell us is that once we get involved, they feel like they can just let it go, right? They can, once we're involved, they know that we're going to do things on time. We're going to, not miss any filing deadlines. They know that we're going to handle the emotional and the dealing with it piece of it. And all that they really need to do is get an update every once in a while.
Sure.
Maybe get involved in a strategic call to understand, hey, we have option A or option B. Here's the risks of option A. Here's the risks of option B. What do you want us to do? Right? But generally speaking, we give you that time back. And so you should think about time value of money in that sense too, because you're not a lawyer, you're not an expert. If you get sued or you're bogged down in a lawsuit trying to do your own discovery or trying to do your own pleadings or your own responses or trying to be the lawyer yourself, think about if you would take that time and instead spend it on your business and then just pay a lawyer who specializes in doing lawsuits, right? To use that time.
Right.
To, you're paying $300, $400, $500 an hour, whatever you're paying a lawyer, even if the lawyer spends, the lawyer, first of all, should spend like 3 hours on something you might spend 10 hours on.
Right.
And then the next question is, if you paid for 3 hours of lawyer time, how much time will that free up for you? And what can you generate in that time?
Right. It's the DIY ROI analysis, right? If you're
DIY ROI.
A deal, yeah, we got to make t-shirts. We walk on the boardwalk, they're going to have like t-shirts now. It's how much time are you going to spend on this? Not to mention, by the way, getting it wrong potentially because you're not specialized in this space, right? But just if you could even achieve the same level of excellence that a proper attorney is going to provide, how much time is it going to take you to get there? And what could you be doing with that time? Not to mention the emotional toll that this is a taxing time for people when, I think most people are operating their businesses in good faith. They're trying to provide good services, trying to do good work for the people that they work with. And when something like this comes along, whether it's due to negligence, an error, or it's frivolous, right? This is taxing on you emotionally, right? And so the more you can that weighs on you, which is going to probably affect the way you perform in your business in other areas. I mean, there's so many other tangential pieces to this. And I think you shared so many insights today of things that people wouldn't think of, right? Moves you can make on the chessboard, even if you feel like you're backed in a corner, that can actually give you the opportunity to thrive.
I agree. And I think that one of the things that you should think about as a business owner is, you start to hire employees. And, you're probably not big enough to hire in-house counsel and pay them hundreds of thousands of dollars a year. But the same way that you're going to hire an employee that does whatever task you need them to do for your business, you should think about the fact that you should be hiring a broker that does what you need them to do for your business. And you should be hiring a lawyer that does what you need them to do for your business. They're just another employee. And when you're working with smaller law firms, you're working with smaller businesses, you should be mentally allocating some amount of time, money, effort, expenditure towards the lawyer employee. And there's other employees too, right? There's like the workers' comp insurance, and there's this and there's that.
Yep.
But the lawyer employee should be an arsenal in your toolbox. And a lot of people, what they don't do is they don't get that lawyer employee into their toolbox until it's, you're on your heels and it's reactionary. And I think there's so many cases that we see. 90% of the cases that we see is somebody that has a bad contract that they just didn't send to a lawyer. And now they need somebody to, help them work out of that. Or they have a bad situation. It's like, well, did you guys have a contract? Oh, no, it was oral, right? A verbal agreement. Okay, well, why didn't you write it down? We didn't want to spend $2,000 on a lawyer. Well, guess what? Now you're going to spend $200,000.
Right. It makes total sense. And I think that anybody that's been in business long enough to go through these things sees that value very quickly, right? And it's hard to see it when you're first starting, and especially if you're starting with nothing and scraping and scrapping and trying to build this thing from scratch. But you will very quickly find that, especially as you start to grow, the notorious BIG, more money, more problems.
Don't be penny wise, pound foolish.
That's probably a better way to describe.
I mean, they're both problems is good.
They're pretty good. They're pretty good. So let's put a conclusion on this and a summary, Anton. So we talked in the beginning about what business owners should be doing when they're engaging with their broker to get coverage, and what they should do at the very least every year during renewal, or what they should be doing right now after they watch this, to go back, double check your coverage, make sure you have those things in writing with your broker. And then separately, when you're in, when it's past that point and you're in an issue, when you get that reservation of rights letter, it is time to engage with an attorney, to have somebody really to oversee this case and make sure your best interests are kept at the forefront of that process.
I think it's a great summary. And I would say one more thing is, if you try to put stuff in writing with a broker and that broker picks up the phone and calls you, and then you email that broker again, and then they pick up the phone and call you, and then you email them again and they pick up the phone and call you, find a new broker.
That is some great advice. Thank you all so much. Anton Kaminsky, thanks for sitting down with us today to talk about insurance and getting business owners in a safer position to do what they do best.
Check us out, Kaminsky Law. We're happy to help with any sort of insurance issues. We're not brokers, but we work with a lot of brokers, and we've seen good practices and bad practices. Happy to help whenever you need us to.